Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I do love buying dividend stocks, and there's something about dividend stocks that I absolutely love, and that's the income. But buying a dividend stock is not that easy, because what you really need to think about is the quality of the business that you're buying. Do this company has a growing revenue? Do they actually have a good net income or growing net income? Do they have a good profit margins? Do they have an excellent free cash flow? Can they actually cover the net income? Can the net income cover the dividends the company is paying? Can they actually increase that dividend? Okay. All of these things are questions I've just asked are very important when you're buying a dividend stock, because there are so many of them out there. You really need to find the right company. And sometimes it can be difficult. But the company that I'm going to share with you today, it meets all of those criteria. It has a growing dividends. It actually has enough cash to pay off the dividend. The dividend has been growing over 30% basically over the last 5 years. The net income is growing. The revenue is growing. Their EBITDA is growing. The free cash flow is growing. Okay. Every angle of their business is growing right now as we speak, and has been growing over the last 5 to 10 years. Okay. Okay. And what I want to do today is I want to show you what this company is, but please make sure you do your own research before you invest in this kind of company. Because remember, in the end of the day, what you think might be a great dividend stock, I might think, I'm not too sure about that. And obviously, all depends on our time horizon and so on. So you have to do your own research, basically. Okay, so don't take my word for it. Do your own research if you like this company. And the company I'm talking about is Broadcom. Broadcom has just reported their earnings. We will look at that in a second. As you can see, the company is actually down about 18% since the beginning of the year. And for 1 year, it's just down 6%. So it's done actually all right in comparison to the rest of the market. This is a semiconductor company. They have loads of different products that go into those devices that we use on daily basis, from Wi-Fi to Bluetooth to chips and so on. So we'll look at that in a second. But this is one of the companies that I own in my portfolio, and I've had it for a long time. So they have just reported their earnings. So that's where we're going to start with things, okay? And I'm going to show you basically, first of all, so for this quarter, okay, they actually beat their top line. Okay, so the EPS, for example, okay, was actually $10.45, and that's a beat. The revenue, which is the top line here, is actually also a beat, but also basically increased to 20.5% year over year. So that is growing despite what's going on in the market, despite the slowdown in the economy, all of that stuff, and the shortage and all the shortage of supplies and all of these things happening in the market with the inflation and everything else. This company has managed to grow their top line, okay? And in terms of guidance, okay, they said the first quarter revenue guidance of approximately 8.9 billion, an increase of 16% from the prior year. So they basically projecting it will actually the guidance basically is going to increase about 16% from next year. Their revenue is going to increase 16%, and that's absolutely amazing. EBITDA is also going to increase. The other thing this company does, so let me just quickly show you some of the things that this company does. They have two different sectors, okay? They have, or segments if you like. They have the infrastructure software. They have the semiconductors. So as you can see right now, the semiconductor is bigger, but they're also growing there from the software side of things by acquiring other businesses. This is what this company does. They acquire a lot of the other business. So initially, there were a couple of companies that came together. From there onwards, from the merger onwards, is basically they've been acquiring a lot of businesses. And right now, they are in the process of actually buying VMware. And VMware will add a massive value to this company if it goes ahead. It's still ongoing. It has been ongoing for a while. So we'll see what that comes out of that. But they grow their business, okay, by acquiring other businesses, as well as obviously the companies that they bought also carry on. They're making a lot more profit for them. Okay, so these are the two main segments of this business, and they have basically in terms of routing, in terms of switching, in terms of physical layers, optical interconnectors, all of these devices that you see that we use on daily basis has chips that were actually created those devices that were created by this company. Okay, so from the enterprise to hyperscale data centers will have a product that this company has created, and one of their biggest customer is actually Apple. So Apple actually uses a lot of the on their phones, a lot of the networking side of things that this company creates. The devices this company creates is used in Apple, and I think 20% of their revenue comes from Apple, which is a little bit scary, but they have come out a lot and said we're trying to diversify, just like Qualcomm. They are trying to diversify away from Apple, but Apple said Apple still relies on them. Okay, so in the long run, I will hope that they will have more. Right now it's Apple and Samsung, so they both actually suppliers. They both supply to these two companies, and I'm hoping in the next 5 to 10 years they will actually diversify away from that and actually get into other, basically have a, maybe 5% is all right, 20% is quite, 20% of revenue coming from one single company. That can be a bit scary. So that's the downside to this company, okay? But I don't think Apple is going to run away from them anytime soon. So they have a wide variety of products that go into these devices that this company creates, okay? And when you look at the financials, so right now, when you look at the net revenue, since 2018, it grew from let's call it $21 billion to right now $33 billion. That's the net revenue in non-GAAP, okay? When you look at the gross margin from 66, almost 67% in 2018, right now to 76%. So those two things are basically going in the right direction. The adjusted EBITDA, non-GAAP, is also basically heading the right direction. Look at this free cash flow in terms of non-GAAP, 8.2 to right now 16.3. It doubled in basically a few years, which is absolutely amazing. To basically in 5 years they've doubled that. Now, is this type of growth basically continue? Can we rely on this? I think we can, but it might not be as quickly as this. Okay, it might be slowed down coming, but at the same time, if the company continues doing this, okay, every single year, it's going to be amazing company, and I think it is an amazing company already. But you can't rely on this. This is in the past, so it's gonna have to grow into going forward. Okay, obviously, but not as much as this. The next thing I want to show you is this. Look at the dividend growth from since 2016 to right now 2023 fiscal year. Look at the 38% growth by the time we get to fiscal year 2023. $1.94 per share. That's how much they were paying, right? Each quarter they were paying this much, so 0.51, 0.5, whatever. So total they were paying $1.94, and right now they are paying $18.40. That is absolutely massive, and that is in the space of what, 7 years or whatever it is. So it is huge, okay? But in the space of 8 years to grow it that much is absolutely huge, and I love that. And this is what I call absolutely amazing dividend growth. Now, is it going to continue doing this? I don't think so. They will slow it down at some point, okay? But guess what? They've just done basically this a couple of days ago. They decided to increase it by 12.2%. Raises quarterly dividend by 12.2. So right now, each quarter you will be paid, if you own a share of this company, per share you'll be paid $4.60 for every single quarter going forward. And that's going to increase maybe next year and the year after. So it might not go up as much as basically based on what they've done previously, but that's still a lot. $18 per share. That's basically how much you gain in every single year. So let's just have a look at the rest of financials. We've said a lot about the company. So in terms of market cap, price-wise right now, as you can see, is $544 per share. EPS is growing in the right directions. Our market cap is $215 billion. Okay, so it's actually a huge company. They have a narrow economic moat, and beta is basically below, just slightly above 1. Okay, current PE is 23. The market is about 26, right? Forward PE, so the basically in 12, in terms of their projections, okay, analysts are expecting the PE to be around 13, which is really cheap if you think about it. Price to free cash flow right now we're looking about 15. So again, it is basically attractive when you look at this, right? And the sector is 26.35, but right now it's about 23 in terms of trailing 12 months. When we look at the dividend yield, 3.36, that's probably one of the highest in this sector, in the technology sector, right? Latest increase was 12%. 5-year growth rate is 43%. And dividend growth streaks of 11 years. So they have increased this dividend for 11 years. And I think they will continue to do this, but I don't think it will be as fast as this, okay? Payout ratio, only 44%. Dividend safety, 67%. And $15.3 billion of basically free cash flow, which is absolutely amazing. And it definitely covers the dividend yield and obviously allows them to acquire other businesses and so on. Profit margin, absolutely amazing, 31%. Operating margins, 40%. Return on equity, 43%. Total return in the last 10 years, okay, that includes price appreciation as well as the capital gains as well as the dividend yield. Okay, we're looking at about 33%, which is huge. It might not continue to do that, but even if it did half of that, it's still great. Current ratio is way above 1, so it can pay their debt in the next 12 months easily. Now, growth estimate for next year is about 7%. And the next 5 years, every single year, it will be about 15%, which is absolutely beautiful. Current price we've already seen. Fair valued, basically, according to simply Wall Street, they're saying is 499. Let's call it 500. So it's slightly overvalued according to them. Fair valued for Morningstar, on the other hand, was $624 per share. A Morningstar valuation is actually 15% discount right now. So, like I've always said to you, I do look at these things, but obviously you have to be careful and you have to do your own analysis and so on, because sometimes you can't rely on just a specific analysis. Even when it comes to the growth side of it, okay, some companies will say about 15%, some will say 10%, some will pay 9%, because their projections, meaning their estimate, is actually different. So two analysts might have two different estimation for this company, and for that reason this will be reduced and so on. So you have to be careful. You have to basically think about it, because sometimes they are biased and so on. So you have to be really careful when it comes to these type of things. Again, sometimes I just ignore it and I look at the company, I look at where it's been and so on. There's other factors that you can take into consideration, but obviously it helps to have an idea of what other people or the analysts out there are thinking about right now. Okay, target price for the next 12 months when it comes to tip rank is actually 653, and that's upside of about 19% going forward. It's strong buy according to tip ranks, and I genuinely agree with them. Okay, total revenue from 2019 was basically 22 billion or and half to right now 31.6. Cost of revenue from 10 to still 10, so they haven't increased that, but their profit margin grew from 12 to 20. And this is what I love about this company. The cost hasn't gone up much. It stayed almost identical. So 10, 10, 10 again, right? But the top line is growing. Okay, the cost hasn't increased. Gross profit has been absolutely fantastic. From 2.7 net income to right now 10 billion. Okay, 2.7 billion to 10 billion right now of net income. When it comes to EBITDA, from 9 billion to now 14.7 billion, and free cash flow from 9 to 15 billion right now. So every single thing that I'm looking at here just tells me this is a quality business, right? And when you look at this and you see their shares, so shares outstanding, they have diluted their shares, but they haven't done that since 2019. Okay, so they've done it. They do here and there. So again, they bought it back, and then so it looks like every other year they actually dilute a bit of the shares. But last year and basically this year, they've also said they will buy back their own shares. I think at the beginning of last year they said they will buy back their shares. I can't remember how much they basically said they will buy back, but they will be buying back their own shares as well. But it looks like they have diluted, which I don't like. Okay, but yeah, there you have it. That is a Broadcom. In terms of dividends, is a great business when you look from that side of things, from financials, from the industry that they're in, every single section, basically wherever I look, this company is absolutely quality. Okay. And also finally, when we look at it from Sharia compliance side of things, when looking business is 100% fine. Interest bearing debt, we're looking about, let's call it 18%, and then interest bearing security is only 4.5. So again, there's absolutely no worries in terms of that. I'm happy to buy this company more of in the next few months. Now, I've said this before, I think, and I haven't actually added to this company for a while. So from beginning of next week, Monday, basically, I will be adding to this company. I don't know how much, but I will be buying a bit of it every single week or every single month going forward. My plan, inshallah, in the next, by the time I finish my ISA account, which is right now, what am I on? I need to basically deposit about 8,000. Okay. I want to make sure by then at least I have 10 shares of this company or closer to, inshallah. We'll see what happens. Okay. If the whole market comes back down again, it'll be up, and I think we might see that. Okay, because December is always a tricky month. A lot of people will be selling, a lot to do with obviously cutting their costs and all that stuff, rebalancing their portfolios. A lot of the big boys will be doing that. Okay, especially the hedge funds and so on. So the market might come back down again, and if it does, I will be buying more of this company, and obviously carry on dollar cost averaging into other companies that I own in my portfolio. I hope you enjoyed that. I hope you like that kind of thing. I mean, if you are enjoying this type of content, it's free, okay? And I'm sharing my journey. That's all I'm doing. I started this to share my journey and help out brothers and sisters that are out there that are looking into buying quality companies that are Sharia compliant, that hopefully, inshallah, Allah will give us some blessings when it comes to these things. But at the most important thing is, please do not get into those penny stocks. I was talking to a friend of mine yesterday, subhanallah, he showed me, oh, have you heard about this company? I was like, no. This one, no, this one. And he showed me a group of people, I think it was about 70, 80 people on one of those WhatsApp accounts. And every single one of them were talking about basically sharing a chart of some of these companies that are going to the moon. I'm like, is that still happening? Is that what people are doing? So please be careful with those penny stocks. Buy quality companies. If you are interested in the stock market for the right reasons, just buy and hold long term, and inshallah, Allah will make it easy for you, inshallah. Or anyway, I'm going to stop right there. Assalamu Alaikum. Take care.